So we proceed with the illustration on capital gain. We proceed on a question, August. That should be August 2024. A very present question. Question 3A. August 2024. Question 3A. We read the question. Superlight Investment Limited. Superlight Investment Limited. Superlight Investment Limited. Superlight Investment Limited acquired land from Wema Estate at a cost of 15,600,000 in the year 2019. Other incidental costs incurred in relation to acquisition of land. One is the legal fee, 462,320. We have commissions, 3,400,000. We have stamp duty, 312,040. We have survey, a figure of 100,000. Then finally, what we call land board consent facilitation. Then you're being told that the Superlight Limited sold the land to Express Limited on 1st May 2023 at a transfer price of 31,200,000. 31,200,000. However, Superlight Investment did not pay the capital gain at the time of transfer of the land to Express Limited. The Revenue Authority issued an assessment on 30th June 2024. That is a period of 1 year, 2 months had elapsed since the date of the transfer. Required. Compute the capital gain tax payable by Superlight Investment Limited, assuming that the company had paid on due date. The second, calculate the penalties and interest and total tax payable by Superlight Investment Limited if the company paid after 1 year and 2 months from the due dates. So we can get back and analyze the question. So we're saying that Superlight Limited acquired the land from Wema Estate at a cost of 15,600,000. So that figure that we use for acquisition, that figure is basically what we call the adjusted cost. And to be precise, that is a purchase cost. So other incidental cost incurred in relation to acquisition, we have a legal fee of 464, that is part of adjustment cost. We have commission of 3.4 million, that is part of adjusted cost. We have a stamp duty, that is 312,040, that is also part of what we call adjusted cost. Then we have the survey fee, also part of adjusted cost. And then we have land board consent facilitation, also part of adjustment cost. So then we are being told that Superlight Investment Limited later sold the land to Express on 1st May 2023 at a transfer price of 31,200,000. So the figure 31,200,000 is what we call transfer value. That figure we call it transfer value. So we're being told that, however, Superlight Investment Limited did not pay the capital gain at the time of transfer. So if it did not pay, then there's definitely what we call a penalty that accrue for non-payment of that capital gain at that time. At that time, we noted that capital gain is paid by the 20th of the following month. So definitely there's a penalty that we're going to basically sort as we do this question when you do not pay the capital gain on time. We're being told that the Revenue Authority issued an assessment that is on 30th June 2024 that after a period of 1 year, 2 months. So basically 14 months had elapsed before they they pay the capital gain. So the first question, compute capital gain tax payable by Superlight Investment Limited, assuming that the company had paid on due date. Assuming that the company did its business well and there was nothing that is pending. So we'll say that capital gain, we'll start with capital gain. capital gain is equals to what we call transfer value minus what we call the adjusted cost. So we can have the capital gain, Superlight Investment Limited. You just note it here, Superlight Investment Limited. Superlight Investment Limited. Capital gain. We say for the month of we say that for the month of May 2023. For the month of May 2023. So I'll have shillings upon and then have shillings here. Then I talk about sales proceeds, or the selling price. Sales proceed is a figure of 31,200,000. Then you say less incidental cost, incidental costs. These are basically costs that are incurred while selling. For this particular, we don't have those incidental costs that were basically incurred. Those incidental costs could basically mean if you did an advertisement while you are selling, or you had brokers who are basically looking for clients. So at that point, we don't have incidental costs, so then we have what we call transfer value. We get the figure for transfer value. So the transfer value in this case should be 31,200. Should be 31,200,000. Then you say less what you call adjusted, less what you call the adjusted cost, less what you call the adjusted cost. Adjusted costs, we said that should be the purchase cost stroke the construction cost plus enhancement cost. For example, the painting that you do to the buildings. Then you say incidental costs that are basically incurred during or after purchasing. Then we less what you call investment allowance. So on the adjusted cost, we have the first one, when acquired, that is the purchase cost. We'll have the purchase cost. Purchase cost is a figure of 15,600,000. 15,600,000. The next item is a legal fee. We have, those are incidental costs, legal fees. So the figure for the legal fee is 464,320. 464,320. Then you have what you call commissions. Commissions. That should be 3.4 for the commission. 3.4 for the commissions. We have the next that should be stamp duty, another stamp duty. Duty. So stamp duty should be a figure of 312, 312,040. 312,040 for the stamp duty. Then you have survey. What you have a survey fee. So the survey fee is 100,000. The survey fee is basically 100,000. Then we have what you call land board consent facilitation. Land board consent facilitation. Consent facilitation. That should be 20. So we look at the total for the total adjusted costs that need to be deducted. So that figure that needs to be deducted. We pick our calculator and we had the whole thing. So we have 15,600,000 plus 464,320 plus 3.4 million. Then we have plus 312,040 plus 100,000, then plus 20. So we have a figure of 19 million. a figure of 19 million, 896, 896, then we have 360, then we have 360. At that point we have, when we less transfer value minus the adjusted cost, we have what we call the capital gain. Capital gain. We get the capital gain. We get the figure for the capital gain. So the capital gain should be 31,200,000, 31 million. We pick the paper and we just look at it again. So make sure that everything is okay so that we don't miss on anything. So that should be 31,200,000. Then we less the adjusted cost. That should be 11,303,640. 11,303,640. That is, should be the capital gain. The withholding tax, which is called the capital gain tax. The withheld capital gain tax. So that is the withholding tax. The withholding tax, we know that that is 2023. So the rate for that time, for the 2023, we know is 15%. So we get the capital gain tax, which is 15% times the figure of 11,303,640. 11,303,640. So the first question, we are basically told by the examiner, that assuming that the capital gain tax was paid on due date. The due date, if it was May, the due date should be 20th of June. If it was done by 20th of June, number one, there are no penalties and interest that basically is going to emanate from it. So we get the 15% of that. So 0.15. So the capital gain in question, CGT or withholding tax, that should be 1,695,546. That should be the capital gain tax. That is for part 1. So we proceed from Roman 2, that is 3A Roman 2. Calculate the penalties and interest charged and the total tax payable by Superlight Investment Limited if the company paid after 1 year, 2 months. So automatically when you exceed the period, that is basically a period of you do not pay by the 20th of the following month, then there's a penalty that accrue that we know that is 5% of that tax that is in question, that is due. Then if you continue not to pay, there's an interest that accrue for 1% of 1%. So we need to get automatically Roman 2, there is a penalty. There's a penalty for not paying, and that penalty, we have a penalty of 5%. 5% of the figure that is 1,695,546 as a penalty. So we can get that penalty. We can get the penalty. So 5%, that is 0.05, 0.05 times 1,695,546. So the penalty is a figure of 84,000.3. We can round it off to a whole number. So we have 84,777. Then we know that if you do not pay, there's an interest that accrue. So we have the interest per month, that should be 1%. You do not pay for 14 months, so then you have times 14, then times the tax in question, that is 1,695,546. We get that figure, 1,695,546, 1,695,546. That is the interest. So that is 0.01 times 14, then times 1,695,546. So the interest that accrue from that, that should be 237,376. We have it 0.4. We just round it to all numbers, so that should be 237,376. So assuming that this person did not pay, they're only prompted by Revenue Authority after 14 months. So plus the tax that is payable, plus the tax payable, plus the tax payable or CGT payable. The CGT payable is 1,695,546. Total amount, we get the total amount of tax payable. That is, if you include the interest plus interest, penalties, and the tax that is due. So the amount that is payable, that should be basically 8477 plus 237,376 plus 1,695,546. So the figure should be 2,017,699. So assuming that this Superlight Limited was not, Superlight Investment Limited was not compliant, basically they should have paid a figure of 2 million. There's a penalty. We say that 5% of the tax that is due. You compare with the 1%, that is 1% of interest per month. We have it there. So if it was not compliant for 1 year, 2 months, that is 14 months, then the tax that is due should be a figure of 2,017,699. Then there's a part Roman 3. There's a Roman 3. The management of Superlight Investment Limited are considering on whether to negotiate with the Revenue Authority in effort of being exempted from payment of the penalties and interest. Advise the management of Superlight required. Advise the management of Superlight Limited on factors that could be considered by the Revenue Authority while negotiating for a settlement of taxes, penalties, and interest. So, for example, you have found yourself in a scenario where you have penalties and interest. So, what are some of the issues that can basically be raised, can be considered by Revenue Authority when negotiating? So, one of it is amount of interest and tax, amount of penalties and interest. We can talk about amount of interest, penalties and interest, penalties and interest, amount of penalties and interest. We can also have the financial status. What do you have as the financial status of the taxpayer, And at that particular time also the issues to do with tax amnesty programs in place. Tax amnesty programs, what do you call the tax amnesty programs in place. That can be a factor that is considered, whether it was intentional, whether non-payment, non-payment was intentional or mistake, whether non-payment was intentional or mistake, where the non-payment of those interests and taxes was basically intentional or mistake. Those are some of the factors that the Kenya Revenue Authority would consider in relation to those interests that emanate and the total tax that is payable to the Kenya Revenue Authority. That is how we basically handle that question on the capital gain tax.